Hey traders, Nick here recapping the week ending 11/23 Friday. Let's start with Friday. Beautiful start of the day. Okay, we were under pressure all night, overnight, and in the morning, but then the open was really strong from the bounce perspective. And then we had one thing happen. I'm going to summarize the day by saying CRAPPLE. Apple fell apart and just took the market with it. Let me see if I can show it to you here. I'm going to go to 30-minute increments. This is the S&P. And so we opened the day, really strong bounce, took us to a neckline, and we even exceeded the neckline, which is pretty positive. And then Apple fell apart, completely fell apart. Let me show you Apple. Long week. Happy Thanksgiving, by the way. Here's Apple. Now, this is a technical move. Upon losing this neckline, technically this was going to happen regardless of the headlines. But there was a headline before the market overnight. I don't know exactly when it broke out, but it was overnight. So we opened with the headline already, which was that they reduced the price on the XR for Japan. First, I thought it was China, and then it turned out to be Japan, which is even less meaningful. Tim Cook is making a whole bunch of mistakes. I think he's not a good CEO. He's not making Apple. He's going to break Apple if they don't change him soon enough. That's my opinion. But what he did here, he took the spotlight off of the iPhone, which has been saving his butt for a while. That's a mistake for him. In somebody else's hands, I think it's a smart move. Now, technically, there's a whole discussion on Apple later. But actually, let's do it right now, because it's pertinent to next week's markets. Apple is a big ticket item, meaning it will move markets next week. And here it is right now. This is a good consolidation zone. But technically, I think the downside target was 70.5 and then 63.5 or 64. So let's call it this green bar right here. So they want 170.5. So there's still a downside Monday. And if if they lose footing there, low 60s are coming. Now, I'm long Apple, but I'm completely defended because it is a fundamental trade, and I'm defending all fundamental trades, and I've been sharing forever. So this price action doesn't surprise me. It's very disappointing for it to happen today the way it did on a short day where everybody's on vacation, etc., etc. So Friday, red. Now, the good news is that the IWM, which is a stock, the basket of 2,000 stocks, those are the small caps. Let me go to the 30-minute. They even went solid green today. And then right where they wanted to commit to that trade that I set up, which, by the way, was really green this morning, like 15, 18%, something like that, for whoever took it 2 days ago, they decided that, okay, it's not worth it. The whole market is not going to go with me. I'm not going to go more than plus. They had a swing of 1 percentage point. So they were down 0.6. They were up 0.4, 0.5%. So they had a 1% move off the bottom. But then they said, you know what? I'm going to close it halfway. So they closed flattish. But that's the middle of the range. So it was a bullish day still for them. So they will try to attack this again, provided the whole market doesn't fall apart before then. So there was good news. This is a basket of 2,000 stocks, so it wasn't all bad. The week was bad. The week was all bad. So this is a weekly chart, and if I go to the SPY, for example, maybe that'll be less busy. Okay, so it's a red week. But more importantly, look at the neckline. They're badgering. So levels-wise, I've been saying we're teetering on necklines. What does that mean? It's just we're testing support that we don't need to be testing. I'm going to go with a bigger pen, custom pen. These levels we don't need to be testing, because if we fail, this will come fast. And if I look at the SPX, which most people follow better than the SPY, for example, 2400s can come pretty quickly if we lose this neckline. This looks like a head and shoulders, even if it's not perfectly drawn, loosely interpreted one. My point is, when you test the neckline, when you jump on the floorboard too many times, it's going to give way. First, they burst to the level they've seen before. So 2600 will bring a level which was what? The February lows, which most pundits on CNBC, quote, want to see it. I don't know why they want to see it, but they want to see it. So this is a head and shoulders. You can see one shoulder, one head, and it's working on the second shoulder. If they lose it, technically, they want to see that number. They're idiots for calling for it, because if that number comes, that means this needs to happen. This size drop needs to happen. So this would be the target that I see. This zone right here, not that. This would be a stopover point. Because I bet you anything, if we go down here, they won't be buying calls, or they won't be buying the market, and they won't be buying stocks. They'll go hide. They're calling, hey, I want to see this. Well, let me see you buy when you get there, because this scenario is unfolding, not that. But that's what CNBC does, creates these moves that are unnecessary. But this is where the technicals are, and I'm saying teetering, that's what gets you. So the week is red, and we are teetering. That's the bigger problem. So next week, oh boy, as if we need more more from the Fed heads. They're all talking, I think including Powell. So what they're going to say, I don't know. What I want to see is a confirmation that they blinked. Now, the Wall Street believes that they blinked, meaning the vice chair came out and said data dependent 5 times in one interview. So we're hoping that Powell is on board. If Powell comes out with the same words that he's saying before that, I think we sell off. That's my opinion. Secondly, we have the economic reports, including GDP, housing, and inflation. And those are related to Powell and the Fed actions. So I'm not sure if we need to see bad news, and if it is good news. Because if it's bad news, then the Fed is really back on their heels and saying they might even skip December. That's unlikely. But at what point bad news will become bad news again for stocks? Okay? It should be bad news for stocks, but for now they're not seeing it as such. Now the Fed, if they come out and say this, we've seen a drop in inflation, but it's all oil, that's bearish for markets in my opinion, because the traders will interpret, oh crap, so they're still on their same mode and it's just transient, because people think that this drop in oil, which is historic, as far as how many weeks in a row, it is just causing this false low read of inflation, so the Fed is still bullish on inflation, which is bad for stocks. Convoluted way of saying the Fed is still in charge of headlines a little bit. So we still have 3 egos involved: Powell, Trump, and President Xi from China. So, and also we have, on top of it, we're drawing closer to the G20 summit, which is at the end of this month. I don't know exactly when it is. But the closer we get to it, the more nervous markets will get. More hopium will build, but that just builds the VIX and the nervousness of the market. What are we going to do? We're still headline dependent, and it's a binary event. I personally think that it's going to fizzle out, meaning they're going to come to terms of sorts, and the market is going to read it as the tariff headline is abated, and we should rally off of it. That's my personal opinion, because unless they're all morons, and it's a possibility, but a very low possibility. They might be rude and obnoxious, but they're not idiots. All parties involved. And so they all have so much to lose. More recently, I've heard more nicey talk from China. Usually it's one person says this and the other person immediately, sources or media says this, immediately negates it. But these days, because this week, we kind of heard other countries come in line with the U.S. to say, China, hey, you should come back and play within the rules now. So the Chinese are back on their heels. That might be my impression, but the headlines I'm reading is more and more nice. Like I get 3-4 nicey talks from China. Like even as simple as, hey, the U.S. is starting to look like they want to do a deal. I've never read that headline from China before. I've read, we hope to get a deal, but nothing about the U.S. wanting to do a deal. It's usually us saying that they look like they want to do a deal. So yes, it's inflammatory, but if you remember back to the Mexican deals and the Canadian deals, the rhetoric was nasty up until the night of. So that is my opinion, and I could be wrong, obviously. Still a binary coin flip, so flip that coin. All right, so I can't count on anything holding. If I have a long position in Apple, I sure better heck be defended already. Just as an example, I like long the IWM small caps the best because of A, it doesn't have Apple in it, and B, the technical setup and somebody's opinion on the seasonality on it. So I'm just taking their word, and so far it's working, so I'm staying in it. All right, so fundamental trades, I'm not putting much on. I'm defending mine. Tactical trades, I'm calling them these days because that's what Wall Street calls them. Basically, if I see a specific situation that I want to target, like today I noted something about Goose. So read the write-up and you know why I can go along here for a tactical trade with short leash. That's just an example. The IWM is a tactical trade with a short leash as well. If I wanted to short Apple, it would be a tactical trade with a short leash as well, because that's a nasty candle for a company with its fundamentals. But this is a big floor for it, the zone. It's not a rubber band. I mean, it's not a hard line. It's a rubber band. But unfortunately, it goes down to the 50s. So I haven't talked to anything below 163.50 because those are the two immediate lines. But there's, below that, this and that. So I'm not calling for them. It doesn't deserve it. It's still well off the highs, the closing highs, 25%. So that's bear territory. All right, so you can see the downside opportunity. There is some good news in the sense where fear, the VIX should be higher. I'm going to look at the VXX and go down to a daily and maybe even a 240, so less noise. I mean, more granular. So why aren't we here since we're teetering on the lows? Why are we lower than the fears we had a few days ago? Or when was that? Yeah, the 20th. So there's something wrong with that. And why was the 20th lower than that? Now, this is an emotional thing, and a spike can come in any time. So I can buy calls at 42 for this coming week. And, if the world falls apart, this will be in the 60s or 70s. I remember it being in the 90s. What, you say? Yeah, it was in the 90s. Here, I'll show you. Oh, well, the VIX was. Sorry. Which is even worse. So what is that? There's 50. Okay, if I go to a monthly chart, there's 96 or 90 something. But that's during the 08 debacle. So you can see why I'm confused as to why fear is lower now than a few days ago. I expected higher levels. They may still come, but let's call it a green shoot. So that's on the fear side. The SPY trades, there is a short to SPY based on this breakdown. I'll show you again the SPX to illustrate it. So if we lose, if we set a new low, and it's just below here, it's not that far down. This is a calculated drop from this head and shoulders, which really should be lower, but I was conservative in picking my spot. And we already filled it. But if we lose this low, the downside from this is in the low 2500s, if not 2440, 2480. So if I wanted to play that, I would buy put spreads down there or sell call spreads right here if I know how to do that, or just buy puts in the SPY or buy puts in anything else I want to short. So I'm sure that you can do the same thing with the Qs, which is the NASDAQ, which is a little less obvious because of the recent low is even lower than before, probably because of Apple, FANG, etc. So there is, there are plays on the short side as well. I noted Goose, IWM, and Apple. So I don't want to keep you any longer than this. A lot of people say today doesn't really count because it's low volume, short day, nobody here to defend it. It's easy to move markets, this and that. It's true. It was very frustrating trading today, but they also say they don't usually bottom on a Monday, on a Friday. So Monday might be a little tough unless we get lucky with the headlines. So stay cautious in either direction, and I'm not stubborn in either way. If I'm wrong, I'm wrong. If I enter a tactical trade and it doesn't play out, I'm out. So I don't turn trade into an investment. All right, Nick signing out. If you have any questions, let me know.